My name is Jonan Kandwanaho, and I'm the Managing Director at Janaki Holdings Limited. And at Janaki Holdings Limited, we offer loans, we give credit. So if you have need for money, and it needs an urgent solution where banks tell you to come after a week or after 2 months, us, we serve you in a matter of hours. So we look forward to serving you. And we are located in Ntinda at Kisache Mall. That is Kampala, Uganda. So it's a pleasure to have you. You can check us out at www.janakiholdings.com. And we shall be ready to serve you. So it's a pleasure to have you today. And I'm here to tell you that we meet every Friday to talk about business, to discuss business. And as it says in Proverbs, iron sharpens iron. So we are here to sharpen one another. Sharpen you as I learn one or two things from you. That's why we have this evening talk. And as I've always emphasized, if you listen in, put in your time, put in your data, and you don't implement all that I share, then you'll have wasted your time and your data, but also you'll have wasted my time as well. So I'll be glad if all that I teach you, you go and implement. I'll be very, very happy. So today we're going to talk about an interesting topic. I know I've been running a series on money lending because we lend money. And I know there are a number of guys who lend money and they would like to learn one or two things. Because we learn from one another, and the things that I'm telling you as well, I learned them from someone else as well. So why not share them with you as well so that you can implement them? So we learn from one another. And of late, I've been doing a series of the money lending process. What do you go through till the point when you collect the money that you lent out? Right away from loan application to loan assessment to loan approval. So today I'm talking about loan collection, and then after sales services. Now for those who missed out in the other talks, feel free to check out all these different recordings and the topics I've been talking about on my YouTube page, Jonan Kandwanaho. That's my YouTube page. You'll see the videos I've been talking about. So loan collection is what I'm going to talk about today. Because at the end of the day, after you've given out money in form of a loan, you intend to have it back. I hope you're not operating a charity. And if you're operating a charity, then you have a different mission altogether. And this might not apply to you, because for a charity, you just give out. If you give out the money, you don't intend to get it back, because it is a charity. It would beat the mission and the vision of the charity if you gave out money with the intention of having it back. For example, it's like if you sponsored a child, you do not sponsor them with the intention of collecting the money that you put into them or that you educated them with to have it back at the end of the day. Sometimes, or even all the time, they are your children, so you owe to educate them, you owe to sponsor them, you owe to take care of them. So same applies to charity. But for this one, if you're operating a money lending business or a financial institution, at the end of the day, it only makes sense, and you can only keep in business if the money you've given out can be gotten back. And that's why loan collection is very, very important. That's why loan collection is very important. So if you give out money, unless it's a normal giving, if you lend out money, you have hopes of having it back. If you don't do that, you'll get out of business. It might not be today, tomorrow. If you have a chunk of money, it might take a bit of a while, but eventually it will get depleted. And that's why even you see the big spenders who give out money, eventually, I can give you live examples, eventually they run short of money. Because money is meant, that's why it's called currency. It's meant to be replaced. It is like current, like electricity. It flows. So it has to keep flowing, then comes back, then it flows and then comes back. So if you lend out money, it has to somehow come back, especially if you're running a money lending business. So that's what informs today's topic of loan collection. So, what are the things you're meant to do to have your money back? First, you have to notify the clients before their due date. People have busy schedules, people have limited time, people are very busy. And it is your sole job to make sure that the client who has gotten money from you is aware not only of the date when he took the money, because they can tend to forget. Someone comes to you, he wants money, and it's all he wants. So when the date lapses, might not be as important to them, but it is important to you. So it is your responsibility, even when someone is not a defaulter. Sometimes people forget genuinely. So it is your responsibility that you take time and call on that person or engage that person of the date they took the money. So you have to notify them. You don't wait for the day when they took the loan to notify them after a month. If the repayment cycle for the loans that you have in your company is monthly, you don't wait for the actual date of the end of the first month to notify a client to be paying. No. You have to get to them before. For example, Jonaki Holdings Limited, we have a system. And this system, because we have a number of clients, we might not notify them one by one, and all of them get the notification. So what did we do? We have a system that has an auto reminder. So when the month elapses, or when it's towards the end of the month by 5 days, you also put it there. You can put 5 days, you can put 10 days to notify your client. So for the system's sake, you just put the time that you want. For us, we put 5 days. So meaning that the client gets a notification 5 days before the loan date reaches. The loan due date reaches. So before 5 days, he gets a notification. And if you are at a level when you've not yet afforded a system, because some of these systems have monthly fees. So you could be just starting out and you don't have this much money or money to pay for the system monthly. So what do you do? That means you have to have the dates for your clientele, and you might have to use manual means. For example, calling them, texting them, or emailing them. So meaning that if you have a number of clients, then you can afford the system, but also you might have to employ someone to be responsible for that specifically, because loan collection is why we're in business. Because at the end of the day, every money that you give out, you have hope that you have to have it back. So it has to be collected. Irrespective of the means that you use to collect it, somehow, if you're to keep in business, it has to be collected. So as 5 days before the due date, you're notified. Then 2 days before the due date, you're again notified. So the client will have no excuse to say that, you know what, Jonan, or you know what, Jonaki Holdings Limited, you guys didn't notify me. You only came on the due date when the loan is expiring. So I do not have the money ready to pay you guys. Then it starts a back and forth. But if you've notified them 5 days prior, 2 days prior, by the time it comes to the actual due date, they're already aware. They already know that, you know, these guys have been telling me all this time, so I have to get their interest ready, or even part of the principal, or the payment, the repayment schedule, the amount of money that they are meant to actually pay. So you notify them 2 days before, and then the due date. Now this is where the gist of the matter is. In the event that you've notified this client, but still on the due date, the money has not come through. Now you realize that the person could have challenges, yes, genuinely, but also the person could be a defaulter or a potential defaulter. A person is aware that he's meant to pay, and they genuinely know that they got money from you. So why don't they pay? The due date comes even after those notifications, and they're not paying. So what you do is not to push them or press them or arrest them from the word go. No. So what you do? Now it has to go manual. You have to call them, find out what the problem is. If there's a genuine problem, if there's a genuine challenge, and how it can be explained. But the explanation that is most feasible is explanation of some payment. Because at the end of the day, every excuse is still an excuse. And that excuse cannot pay staff salary. That excuse might not necessarily run the business. So at the end of the day, you have to tell the clients that the ultimate is for them to pay. Now, from experience, what happens is that a client will tell you that, you know what, Jonaki Holdings, give me 5 days. Now, you realize that the month has already ended. And this person is asking for 5 days off to start looking for the money. When the person had a whole month to at least look for the interest of the money or some bit of payment based on their commitment. And now he's buying time of the 5 days so that he starts paying you. Now, ideally, the time we started, because we were a bit inexperienced and we had not got a mentor in this industry, I spoke about mentorship. You look out for my YouTube video. We had not got someone who was doing the thing and doing it perfectly. And that's what a mentor is meant to do, walk the journey with you. So we had not got a mentor and we're doing things haphazardly, learning from experience. And you know, with our business, learning from experience is very expensive. Because every step of the way where you're learning by experience, experience will cost you money. It will cost you money depending on the amount of money that you give out. If you give out loans of maximum of 70 million or 100 million, that might be the cost of experience. Like for our case, some of the experiences were as expensive as 70 million. Totally gone, lost to the fraudsters. That was part of the experience that we paid for. But had we had a mentor then, we might not have landed onto that client. We might have got him red-handed and not given him the money. But because we're learning from experience, that's how expensive it became. So then we're still young in business and had no someone that was walking the journey with us. So what would we do? Client would tell you, Jonaki Holdings, wait up for 5 days. I'm going to organize something and pay up. And you wait for 5 days. Now you can imagine if you have 100 clients and almost every client tells you to wait for 5 days. Leave alone that. If someone tells you to wait for 5 days and you call them on the 5th day and they still will not be ashamed to tell you to wait for 5 more days. So for how long are you going to push that? And unfortunately, it's what we are doing. Guy will tell you wait for 5 days and you wait. Wait for more 3 days, you wait. And you know, ultimately, a defaulter is a defaulter. If he has no intentions of paying you, they will definitely not pay you. Even after 30 days, even after 90 days, even after 180 days, even after the time when you write off the loan. It will be back and forth and they will still not pay you. That is typical defaulters. So in that case, what do you do? In this case, what we did, based on experience and also based on the word from our mentor, so get me correctly. I emphasize mentor because if you're walking this journey, experience is very costly. If you have little capital, you might close shop and lose your business, plus the money. So if you want to avoid those frustrations, even if your mentor is charging you, pay that fee and the benefits will be huge. So ultimately, after we learned is that don't give them the 5 days they're asking for. Because you notify, they took a whole month. Because you gave a loan a month ago. If your payment schedule is a month, to some it's weekly, to some it is 2 weeks, to some it is annually, you can't know. But for us, we give loans monthly. So the person had a whole month and they even committed that they would pay interest or make a repayment after a month. You notify them 5 days before the due date. You notify them 2 days before the due date. Kind enough, you notify them on the actual due date. And they still have the audacity and the confidence to tell you to wait for 5 more days. So, some instances, based on the situation and the client, and I'll explain all these clauses that I'm putting there, you might have to press hold You have to press on with the calls, with a push for the client to make the payment. Incessant calls. You just tell them, at least if you cannot, make some payment. Make some payment. Now realize that there could be some clients who would have worked with you the journey for quite a while. And they're really genuinely good clients, but just they had some challenges, or they are held up, or their cash is held up somewhere, and they cannot pay in that due time. So those situations vary from client to client, but they rarely come along. Those are rare situations. So they shouldn't happen all the time. So in the event that it is a normal situation, you have to press the client till the 5 days. Now, out of the 5 days, not necessarily when the date that they requested you to extend, out of the 5 days, you send them the first demand notice. Now, the demand notice is to notify a client that, you know what, you've gone beyond your due date, and here is your balance of the interest plus the principal plus the penalty. Now, based on the policies that you have in your company, and if I emphasize that if it's still a small company, I don't have any procedures or policies or whatever, you still have to notify a client of how much he owes if there's a penalty for going beyond the date. Now, most of the time was still at our infancy, we would wait. No penalty, no nothing. And not knowing that had this client paid in time, you'd have lent this money to someone else. So meaning that there has to be some bit of penalty. There has to be something that pushes the client to make a payment in the time that they committed to pay. So after the 5 days, you send the demand notice. Now, in the law, this is the evidence that tells you that, you know what, even if you go to court, I gave you ample time, and I gave you leeway to make payment, but you're not coming through. Now you'll have a choice. Because ideally, if the client has a contract of making payment of interest only every end of month, now you even have the audacity to call off the whole loan. Say, you know what, given your experience, given the experience I've seen, and given your behavior, I am afraid I cannot wait for the time that you applied for this loan. If you applied for a year or 6 months, you might reconsider based on the situation. Because a bad client is a bad client. Whether you pamper them, whether you nurture them well, whether you do what, they're still bad clients. A fraudster is a fraudster. Whether you say kind words to them, whether you handle them properly, they will still keep fraudsters. So there are no kind words for such people. So in this case, you have to be square and straight to your point. Send them the first demand notice after 5 days. That's what we do. So you may choose to send after 3 days. You may choose to send after 7 days. But us, we send a first demand notice after 5 days. Now you might be there and asking yourself, what is a demand notice? A demand notice is a letter from your company that is issued to the client notifying them of their balance, their penalty, if any, and the default level, and your communication of whether you're calling off the whole loan or not. A first demand notice. Now, if the client gets the first demand notice and they do not respond, because some of the clients are like that, and they don't respond, you still do not stop there. You still do not stop there. You have to keep pushing. Because now you have to start asking yourself, what collateral did this client commit? Because the way he's turning out is not healthy. So after 7 days of pushing for any payment, if no payment has come through, issue the second demand notice, notifying the client of the amount due, the penalty, and the principal. Now, what you're trying to do is that there is a trail of evidence, there is a trail of a journey, there is a trail that shows that, you know what, I'm pushing this guy, he's meant to make payment, but it's not coming through. In the event that things get out of hand and you have to go to the courts of law, you have enough evidence on the file of the client, because you give them a copy, you also keep a copy on file. So you have good evidence, you're building up, that you know what, by the time I foreclose on this property, by the time I push this client, by the time I engage this person, I really had pressed my way through, but nothing was coming through. as per the commitment of the client. So after the 7th day, you issue the second demand notice. Now, as nature would have it, some clients do not respond. And in these demand notices, you're even telling them that, you know what, if you don't respond, there is a likelihood that I'm going to start foreclosing on your property. I'm going to start foreclosing on your property. If you have a collateral that you committed, if you have an item that you committed, now I'm starting the process of foreclosing on it because you are not responding. And some of the clients will still not respond because their intention is not to pay. The intention of getting money from you was to defraud you, or perhaps stress you, or perhaps make you get out of business. They have their own agenda and their own intentions. So after the second demand notice, you only wait for maximum, as after 5 days, we send the what we call the default notice. Default notice. Meaning that the loan has gone to default mode. It is now towards the end of month, towards the end of the second month. So the loan has gone to default mode. That's why you send a default notice, notifying a client that, you know what, you have defaulted. Now let me ask you a question. If a bank gives you a loan and you default on it, what do they do next? I wish it was a physical interview with you. You'd answer me. But you can put it in the chat. What do you do next? Start on the process of foreclosing because these guys committed a collateral and they're not willing to pay. They are in default. So you have to start the process of foreclosing on the property. Now this is where it gets interesting. If you've been operating informally, you're not registered, you're not licensed to run a financial institution, to run a money lending institution, this is where you get into the hot soup. This is where you get mixed up. Why? Because the guy is not paying through. You have their collateral, but you cannot foreclose on it. If they give you a car logbook and you didn't caveat it, by the time you send a first demand notice, perhaps the guy has even sold off the car. Why? Because a logbook doesn't mean a thing. If I come and give you my car logbook, it doesn't mean a thing. I'll still go access my TIN number, sell the car, transfer it. Because there are no third-party interests. You've not endorsed it. You've not caveated it. You're keeping the logbook does not add any value to you as a financial institution, as a money lender. Because I guarantee you can do nothing with that logbook unless it is caveated. So because I have your logbook, and yet I'm operating informally, I do not have a license, I cannot foreclose on that car. More so, I cannot even get it from you. Why? Because I don't have any proof that I have vested interest on your car. That's why it's important that if you've been operating informally, it's now time to formalize. Register that company, register that business, and get a license so that you operate as a licensed person. You might think you're saving a lot by not paying for the license or by not operating formally, but you might lose way much, not even might, you lose way much than what you'd have lost if you're operating formally, if you're licensed, if you're registered. So if the date lapses, you get to the second month, you're not licensed, you cannot foreclose on the property if it's a car. It gets worse if the collateral is land. It gets worse. That's why you see some of the titles, they are special titles. Guy will go to lands and say, I lost my title. I have a photocopy, I have my national ID, I want to create another title. For you, you're there comfortable keeping a paper as a title, not knowing that the client is processing another title. By the time you realize, because the guy got money from you, he even puts in money, gives it to land office guys and all that, special title out in just a matter of a week. Why? Because you don't have an endorsement, you don't have any mortgage that protects your interest on the title. Because had you put a mortgage on that title, land office would say that, you know what, you didn't lose your title. You actually mortgaged your title. You used your title to get a loan. So first pay the loan, then you can have your title. So you cannot do any transaction on that title until you make the payment of the loan. That's how it is important, and that's why it is very key that you are licensed, that you are formally registered, so that you can protect your interests and you do not lose your money. Guy will go process a special title in a few days, and by the time you realize the title that you have in your hands is nothing, it's not making any sense. And lo and behold, it's a back and forth, you've lost your money. By the time you battle out in courts of law, it is 1 year, 2 years, 3 years, 5 years, 10 years. And sometimes you cannot turn around the clock. You cannot turn around the equation. You've lost your money. All you have is a paper. Why? Because you didn't protect your interests on that title. If it's a car, it's already sold. Now for a car, sometimes even if you're formally registered, you can even put a caveat on that car. But if you've not tracked it, guy might drive, we've had scenarios, guy might drive it to Congo. The car is caveated, but if it doesn't have a tracker, a guy drives the car to Congo, he sells it to Congo. You look around for the car on Ugandan roads and you can't get anything. The guy is not paying. You cannot take them on. Why? They sold off the car to some other country. And you count that a loss. You count that a loss. You can imagine. But had you put a tracker in that car, you'd see where the car is. You can geofence that car so that when it's moving towards the border, you see it's moving out of the country, you can get notifications that, you know what, the person he gave money is trying to move out of the country with the tracker in their car and with the collateral running out of the country. Now, if the client has not told you that they are moving out of the country with the car they use as a collateral, it is time to inform them, you know what, you cannot move further. That car is geofenced, and you bring back the car on board. Sometimes, but those are worst case scenarios. Sometimes, guys sell the cars in spare parts, but those are rare cases, unless someone is a real crook. But there, you take them on squarely then. But usually, the most common trend is that under collection, if you've put a caveat on the car logbook, install a tracker. Because there you can know that the car is within the country and it's still with the client, it's on the road. So it is very key. And for business cars, if they are being used as a collateral, they have to be comprehensively insured. In the event that they get an accident, because they are very busy moving, then you can easily get compensated by the insurance. So as I started this talk, the ultimate thing, the gist of the matter, the blood of the business is you being able to collect not only your principal, because that is blood and breath of your business, but also the interest. Because you not pay your staff using the principal. You not pay your staff salary using the principal. You not pay rent if you still rent in your offices using the principal. You definitely have to use interest. So meaning that you can only keep in business if you're making interest, if you're making profits. Just like any other business, you can only keep in business if you're making some interests. But if you're not making any interest, if you're not making any profit, then you had better close shop before shop closes you. So guys, I see our time is fast spent. It's a pleasure to have you today. Make sure you watch, but more so implement. If you've been operating informally, formalize. If you want more talks, check out my YouTube, John and Kandwanaho. See you at the top. God richly bless you. I speak blessings over your business. I speak blessings over the works of your hands. I speak growth and prosperity all through. I wish you the best. Enjoy your Friday and the rest of the weekend. Love you, and see you next week, Friday, same time, 5:30 to 6. Thank you.